Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, Wednesday, the 11th of December, 2019. What we do on Swing Trading Today is we review the pre-market activity. This would help. What we do on Swing Trading Today is we review the pre-market activity, and the pre-market activity implies what the markets may do this morning and what they probably will do this morning, not necessarily how they will close. I'll do a market wrap this evening with members, and we'll discuss how we believe the markets are going to proceed from here. Now, today is a critical day. I named this commentary Swing Trading Today Countdown to QE4 ? And the reason why I labeled the YouTube video that name was because there's a consensus building that the Federal Reserve is on the verge of beginning a new round of QE4. Call it QE5 if you believe, as technically I do, that this most recent round of buying by the Federal Reserve of very, very short-term Treasury bills, not the coupons, not the longer dated maturities, is in fact thank you for that like, appreciate it, is in fact a new round of QE4. We're calling it not QE, just to mock the Federal Reserve. But there's a growing consensus that the Federal Reserve, in order to keep a lid on the banking system, in order to keep what is really growing to be a problem out of their control, under wraps, under control by the Federal Reserve, they're going to need to go out and buy longer dated maturities. And this really put the icing on the cake. I read this yesterday. This is off of Twitter. And in fact, I'll share this. I'll throw this in the chat box. You could read it at your leisure, the entire. But I just want to point out the highlighted notes here. The title of the Credit Suisse white paper is Global Money Notes 26, Countdown to QE4, ? That's where I got the title of my video today. So Credit Suisse. And this is from Zoltan Pazer. Sorry if I can't pronounce that correctly. All right, so I'm going to read the highlights here. They've lined up forward settling sponsored repo trades to lock up balance sheet for, their grammar's not good, for the term, but they don't know the rates that they'll have to pay for these trades or if banks will be able to fund these trades. The banks, I don't know this for a fact, but the banks are behaving as if they are insolvent. They don't want to lend to each other. They don't trust each other. And they're looking for the Federal Reserve for liquidity. That's what this whole repo thing is all about. And they are missing the incentives at play, moving lower. If we are right about these funding stresses, the Fed will be doing QE4 by the end of the year. Treasury yields can spike into year end, and the Fed will have to shift from buying bills, which is what I just mentioned, that's what they've been doing since September, to buying what's on sale. That's the coupons. That means 5-year bonds, 10-year bonds, 20-year bonds, 30-year bonds, etc. And the reason why they need to do this can be summed up, and I went over this, I believe it was on Sunday Night Futures Live. The reason why they're going to need to do this, in my own opinion, my own humble opinion, being a technician, is that's better, wrong glasses, is that when you take a look at the chart of the 10-year yield, it's breaking out. And you may be saying, wait a minute, what's going on there? The Federal Reserve is buying up T-bills. Yields should be moving lower. They're not. They're moving higher. They're breaking out. And I'm going to show you the charts right now. So here you have quarterly chart. The 10-year Treasury yield, not the note. quarterly basis, an inside quarter thus far. This quarter is almost over. It's an up quarter, a strong quarter. We're off the highs of the quarter. This may not look ominous, but it is. We are potentially putting in a triple bottom here. I'm not a big believer in triple bottoms. Rarely do I use the terms, but of late, I'm using it more and more because of this particular chart here. When you take a look at a weekly view of the 10-year Treasury yield, last week, bearish key reversal bar, a higher low from the prior lows. This week, a breakout above this upper band of resistance. The week's not over yet. Good morning, Mila. From Portland, Oregon, our Pacific friend. How are you, my friend? So yields are breaking out here, and this is not going unnoticed by the powers that be. They cannot ignore this. Because remember, as this presses higher, the federal government, which is bankrupt, we are bankrupt. I can't even laugh at it, but it's a fact. The payments that we make on our national debt increase dramatically. They cannot afford, literally, they cannot afford to allow this price action to continue. Therefore, going back to this note by Credit Suisse, and I'm not just rendering my opinion on Credit Suisse. I've been saying this for a long time now, but you're seeing more and more commentators that I respect, economists, and now you have a investment house coming out, putting out a white paper on it, and this is only a couple of days ago. So this is fairly recent stuff. So while I went into this Fed meeting not expecting all that much, I'm expecting a bit more now. I think it's going to be nuanced in terms of what they're going to say. They're not going to come out and say, we're going to start a new round of QE. They'll nuance their verbiage, and they'll get their point across. Because this cannot be allowed to happen. This breakout cannot continue. So, more to come here. Here is the economic data. We have the CPI number, which comes out at 8:30. That's the Consumer Price Index. Pay particular attention to the core CPI. That's what the Federal Reserve pays attention to. That's X food and energy. Remember, they don't really care about Main Street. They care about the banks, right? So they'll back out food and energy because it doesn't matter to them. They'll call it transitory, volatile. If beef prices go up, they'll say, you know what, we'll curb the CPI number because somebody else can go out and buy chicken. You know, it's very manipulated, these numbers, and it's nothing like the way they calculated it back during the Jimmy Carter days, during the heyday of inflation. Then, of course, we get 2 p.m. FOMC announcement, and then, of course, this ridiculous press conference that Jay Powell puts on. It's just a never-ending drumbeat of volatility after that announcement comes out with every word he utters. So watch him read off of a piece of paper today and try to stick to his script. It's horrible. Okay, let's get to the pre-market activity. Then I have several symbols I need to go over from our members, and let's go to the pre-markets. I want to kick things off. These are going to be 4-hour charts. I want to kick things off with the 10-year yield. Not the yield, sorry. The 10-year note, the price of the bond. And I mentioned yesterday morning during swing trading today, I mentioned I was concerned with this uptrend. It appeared as though, and I drew these lines here, it appeared as though what we were setting up for was a bear flag, not a bull flag, but a bear flag setup. And that is a bearish setup. What happened yesterday? We broke this lower band of support. It's a pretty reliable setup. Now this morning, we are pressing higher. So the question then becomes, do we have a higher low? I will argue yes. And the reason why I will argue yes is because it plays into our narrative. It plays into our thesis that the Federal Reserve is going to go to war against the US dollar and against rising yields. They have to. So expect the price of bonds to move up higher. RSI validating. Moving on to the US dollar. The dollar was very weak yesterday. And it looks as though we're probably going to get a bit weaker here. Because yesterday, we broke down below this support level, which I drew yesterday. That was a line in the sand. We pulled back, rallied back overnight. And it looks as though what you have are bulls that are in denial. They're not acknowledging the fact that the US dollar is, in fact, rolling over here. And they're trying to rally it back, trying to recapture support. You can see we were back above support this last 4-hour bar, but we were rejected. The dollar was rejected. And I would expect to see a continuation move lower here, a breaking of this support level. We're straddling it right now. We're flirting with it. And if that occurs, what that means, this is not going to close until 9 a.m. We're down below right now. It could rally back. Anything could happen here. But I think it's going to break lower. What that means is that you'll see a bid under precious metals, the gold miners, assuming that the bond market continues to rally as it is this morning. Moving on to gold. Gold versus yesterday continues to build some momentum here. We have higher lows being put in. And what we're looking for, if I'm right about the Federal Reserve today, what we're looking for is a breakout on the price of gold. And it can happen like that. A rally up and through the 1475 level. I mentioned yesterday that our price target for gold was right where we're at current. We hit it. Our new price target is 1475. If I'm right on the call that the Federal Reserve is going to have to be a little bit more nuanced, more dovish when it comes down to buying longer-term debt, forcing down yields, forcing down the US dollar. Taking a look at silver. Silver pressing higher here this morning. We're looking for a breakout. At current, we are flirting with a breakout. But again, this bar doesn't close until 9 a.m. Eastern Standard Time. So we'll see whether or not we hold this current breakout point. And if we do, we're heading up to 16.8 on the spot price of silver. I want to take a look at other commodities that are denominated in US dollars. And the one that's most interesting to me right now is oil. We'll go with the light sweet crude number. Yeah. So we're setting the stage here for potential breakout. So here is our lower band of support. And again, folks, these are only 4-hour charts indicating how we may open up this morning. Not necessarily how we will close. We'll discuss with members this evening on Market Wrap our strategy moving forward. So members, stay tuned. Last night we did a market wrap. That's posted on the website. So crude is down at current, but it's rallying off its lows. We are in a triangle formation. Watch for a breakout on light sweet crude above 59.50 the barrel. And if the Federal Reserve does as what I expect, they announce a new round of QE, whatever they're going to call it cupcakes, call it popcorn, call it cheese doodles. I don't know what they're going to call it. They're probably not going to call it QE4. So if you don't hear that, don't hold me to it. Because if they say QE4, it means that all the other QEs failed to do their job. So they're not going to call it QE4. So watch for a breakout here on any indication that the Federal Reserve is going to begin buying longer dated maturities. Taking a look at the always popular nat gas. I thought I had it up here. My apologies for not being prepared. Okay, here we go. So nat gas gap down Sunday evening. We were doing Sunday Night Futures Live, where we go live each Sunday evening, and we discuss the futures action on Sunday evening for all of you junkies that are out there like me that just can't wait for a Monday morning. And we are off the lows of the week. I'm not confident yet that that we have a bottom in here. I would like to see a pullback and a retest of lows. We're in an ascending wedge formation. Could this be resolved with a breakout to the upside? Sure, anything's possible. Could be resolved with a breakout to the a breakdown to the downside. We will trade according to what the market gives us. We'll trade the market we are given, and if we begin to see a breakout above prior support levels at current resistance, then the path of least resistance may be changing back to the upside for natural gas. And I'll go over UGAZ in a moment when I go over members' stock chart requests. Taking a look at, I want to take a look at Bitcoin. And then we'll go to the stock market futures. Bitcoin is becoming interesting. I want to go to the weekly chart. Here's a chart that really matters to me. The weekly chart of Bitcoin. I would like to see a pullback here and another retest of, let's call it the 7,000 mark. I mentioned our price target earlier in the month was 7,000 to the high 6,000s. We hit that level. Now I'd like to see it bounce yet again. And then look for a breakout above this upper band of resistance. That sets the stage for a huge run on Bitcoin. So we're watching it carefully. And we may be looking to get long here fairly soon. We're down on the week. The trend on RSI is down, but it may be changing because we broke out back here in October. We're pulling back. The question is, do we hold lows? And does this become a higher low for RSI? And do we begin to break out? So Bitcoin looking interesting here. Let's go to the stock market futures, and we will go over to our member stock chart requests. We'll begin with the NASDAQ. The NASDAQ has been weak of late. This is the weekly chart. We're going to drill down here. Members will talk about the weekly charts in our group sessions. Let's go to the 4-hour chart. Okay, so we are up at current. We have technically two resistance levels immediately above here. And we're looking for resolution of this consolidation. And it could be, this is a secondary upper band of resistance, and the primary being annotated in green. This is the Pimp Mac Daddy resistance level, 84, just shy of 8,400 on the NASDAQ. If we rally through and close above and ideally retest that support level, I think that we will proceed to new highs on the NASDAQ fairly soon. But that really all depends upon the Federal Reserve. Again, do they announce a new round of QE? Because if yields continue higher and you begin to see a continuation move higher, excuse me, a continuation move higher in the coming weeks on the yield, the stock market's not going to like that. So, especially if you see a two handle on yields. Remember, the stock market is rallying because they believe that the Fed is their friend. If you see a two handle on the 10-year yield, they have to start questioning, is the Fed still our friend? So the Fed needs to feed the geese here. He needs to feed the market and keep this monster, this horrific heroin-fueled rally alive. Because when it ends, it's going to be like a game of a house of cards. It's going to be an ugly end. So the NASDAQ, expect to move higher here. I don't think that the Federal Reserve is going to disappoint. Because if they do, brother, look out below. Here is the Russell. Inverted head and shoulders set up here. Left shoulder, head, right shoulder. Here's your neckline. And we're watching for a breakout. Now, if I'm wrong, we'll know it. And this really will matter after the Federal Reserve announcement. How will the market behave? That's what we'll be curious in wondering. And remember, I say this to members all the time, I don't want to see anybody losing money. Remember that the knee-jerk reaction by the market is usually wrong. Go back to most big economic data results, whether it be non-farm payrolls, whether it be a Federal Reserve announcement, the knee-jerk reaction is usually the wrong reaction. So I am long of the gold miners. I am long of silver. What do I want silver and the gold miners to do immediately following the Federal Reserve's announcement? I want it to drop like a rock and then rally back because the knee-jerk reaction is generally wrong. Why? Algorithms. Rapid-fire trading. They're scraping the headlines. And then human intervention comes into play again, and they rally the markets back. And they hang on every nuanced word of the Federal Reserve, or the Jay Powell in this case. So don't trade the knee-jerk reaction. Be very, very careful. So Russell 2000 appears to be setting up nicely here. We'll go to the S&Ps. Very similar setup here to what we're seeing on the Russell. Inverted head and shoulders setup. Here's your left shoulder. Here's your head. Here's your right shoulder. And here is your neckline. This is what you want to see broken here. If we rally through that level, in all probability, we're going off to new all-time highs. And if we fail to close above this support level here by the end of the day, then we can come all the way down here to 31.18 fairly quickly on the S&P 500. but I don't think that's going to happen. I think that the fix is in here for this market to proceed higher, especially with the tariffs off the table. So more to come here. We're going to move on to members' stock chart requests. This is where I review the symbols that our members submit for me to review. And we'll take a look at those now. The first one up here is going to be Beazer Homes. I've spoken about Beazer in the past, and this is a daily chart. We'll go to the weekly chart first to illustrate our trading so far this week. And I really like this setup. I want to remove this drawing. Here we go. Good. And what we're looking for here is a close above this support level on a weekly basis. And then ideally, a rally up and through the $16 per share mark would have us breaking out of a long-term downtrend. And I'm going to set up an alert here for when that happens. I don't want to keep revisiting this chart until we get a breakout. It's just an efficiency of time. Because the market will tell us whether or not it's time to buy or not. We don't want to anticipate a breakout. We want to buy the breakout. So we'll keep this active. Next 10 days, trigger twice. And we're golden. So 2 steps must occur on a weekly breakout. 1, we must hold this breakout. 2, we must break out and above this upper band of resistance here at, let's call it $16 per share, rounding it up. Now, what could influence Beazer Homes? If they don't come out and reassure the markets that they have interest rates under control, Beazer Homes could quite possibly sell off and finish the end of the week down below the support level. So this is a weekly chart. I don't know whether or not this breakout is for real yet. I want to see us hold this breakout and then break out above this primary upper band of resistance. I like the way the Stokes are setting up here. On a weekly basis, we're getting a higher low. Same deal on RSI. Daily chart. Daily chart, I'll keep the same alert alive here. Daily chart is simply validating our weekly view of the setup here. In fact, what I'm going to do is I'm going to overlay. Hey, Sam. I went over that earlier. Yeah, Sam. Is this the article you're talking about? Credit Suisse? Yep. I don't know whether you could see it. I'll throw another link in there. Or whether or not you have it. Cool. Yeah, it's this is going to be an interesting Fed meeting. So Beazer Homes, we have the weekly overlay here, rising lower band of support. Here's our upper band of resistance. We're looking for a breakout here. It looks good right now. We want to have this Federal Reserve indecisiveness with regard to buying longer dated maturities. We want that in the rearview mirror. Once we know we get a new round of QE4 and pressure on yields, you're going to see Beazer Homes probably rip. So I like this setup here. More to come. Members, let's go to Salesforce.com. I haven't spoken about this one in a while. Let's clean this up. Let's go to a weekly view. All right, so Salesforce is a bit weak here. I don't see any compelling reason to go buying at current. We did break out of this downtrend channel back here the week of October the 28th. Now it appears as though we're going to pull back and do a retest. I think we're probably going to go lower here. That doesn't mean if you're an investor, you go selling the shares. It just means that we're going to retest a breakout point. Welcome, Sam. And for those that are just joining in, if I could ask you to click that like button, if you're not currently a subscriber on the YouTube channel, if I could ask you to hit that subscribe button and the bell button, it'll notify you when we go live. And there's also a link in the description area below to join our email list. We hate spam too. You're not going to get spammed. But on Thursday nights and on Sunday nights when we go live, we send out a 15-minute advisory of when we go live. So just join that email list, and or if you watch us on the website, click anywhere on the website and you'll get notified 15 minutes in advance. I'm sure you get an annoying pop-up that bothers you. And you can just join any email list. All right, so back to Salesforce.com. Bearish key reversal week thus far. And ideally, we pull back and retest support. We do have a support level above here that I want to point out. And it may hold. And at current, we're flirting with it. 155.97. We closed yesterday out 156.4. So not that far away. We challenged it last week. We reversed off of it and closed above. This week, we're challenging it yet again. Lil Barn. Thank you very much for that. Appreciate that. Lilborn's from a lot of Europeans on. Sam from Italy, Lilborn from Great Britain. Welcome, guys. Okay, so Salesforce daily chart. So yeah, this is the support level to watch. We reversed very strongly off of it on December the 5th. Now, if we overshoot to the downside and rally back to close back above 155.97, it may be a buy. It may be worth entering. But ideally, as always, I like to see pullbacks and retests of breakout points. Stokes are very weak on a daily basis. They continue to decline. So I wouldn't chase a rally. I would watch and see if we close above this support level. Because when you have Stokes declining and down below 50, rallies tend to fade. I'm a big believer in that, especially with individual stocks. May not be as true when it comes down to indexes, but when it comes down to individual stocks, that is certainly the case. Oh, you're living in Switzerland. Very interesting. Okay, good info. And that's my comments on CRM. Tesla. Tesla's looking good. I may be buying a Tesla roof, believe it or not. They have a roof. I've been waiting to redo my house, and I've been waiting specifically for, they've been around for a long time, but they haven't gone mainstream. And that's an integrated, in the Northeast here in the United States, we use a composite roof shingle. And rather than putting solar panels on the roof, I've been waiting for the solar panel to get integrated into the sheathing itself, the materials, which is in fact the roof. So it's all integrated. You don't have a solar panel. And My wife came down. I was talking to her about Tesla, and she says, you know what? They have a roof now. So I popped it up. As a matter of fact, I will show you. How do I get out of here? Here it is here. Pretty cool. So I've been waiting for that, and we finally have it. It's coming mainstream. So Tesla product side, I'm not big on their cars, but the roof, I'm certainly a customer of. So more to come here when I pull the trigger on that trade. But going back to the charts now, I kind of got off into the weeds. Let's go to a weekly chart. All right, so we pulled back, obviously rallying this week. We have resistance immediately above at 348. Saying, I'm pretty sure that Italy will agree with the European stability mechanism. Pretty sure because Italian debt is in German banks, so we can't vote against, or they will. Yeah, huh? Great to have a vote in the good old EU, huh? What a mess. Sorry to hear that, Sam. The Greeks, I'm sure, are the same in the same situation, and the Spanish and the Portuguese to a certain extent, right? It's terrible. We're looking for a breakout here on Tesla. All right, so our alert is set here. Set it and forget it. And if you're interested in getting Trend Spider, there's a link below. Use the discount code. It's below there. I think it's CT25Z, and you get 25% off. Daily chart, Tesla. Here's that resistance level again. Let's overlay the weekly trend lines. Yeah. If we break above and close above 360 spot 55, we're coming up here to 375. This is where weekly resistance is. And if we close above that level, let's go to a monthly chart. We're going a lot higher here. A lot higher. So I want to know when we break out on Tesla, because we can extrapolate out from prior peaks where our price target is for Tesla, and it'll be up here, this rising upper band of resistance. So Tesla's looking rock solid. A great consolidation here, but I want to buy the breakout. I don't want to hope when I should fear. I just got an alert from YouTube. A person named CRTB, if you're out there, I'm not sure what you mean. Subscribe trade? Can you clarify a bit more there? I'm not sure what you mean by that. Let's go to an intraday view of Tesla. Yeah, 4-hour chart. Looking good here. I'm watching for a breakout on Tesla. I think we're moving up higher. I like it. I like it a lot. So, members, more to come here. And with that, folks, I'm going to say have a very, very profitable trading day. Thanks for joining me so early in the morning. And for our folks over in Europe, late in the morning, early afternoon. And if you haven't already done so, please subscribe to the channel. Hit that bell button and give me a like if you could. And everybody have a great day. Take care, Sam. Be well. Everybody have a great day. And I will talk to you members tonight on Market Wrap. Be well.